Most see a 5 bill as a mediocre latte or a fleeting Fortnite skin, pocket change sacrificed for a dopamine hit. To the 1%, it's a seed for a sovereign empire. Math doesn't lie. $5 a day at a 10% annual return yields $1.6 million in 45 years. The system hides this, wanting you distracted and broke. But I hear the critics. I want to enjoy life now. Or, what investment actually pays that? Enough. We're stripping away the illusions. I'm launching a 1-year high-stakes experiment to prove that micro-investing isn't a sacrifice. It's a tactical blueprint for liberation. In this video, I'll reveal my exact platform, tax shields, and cold, hard results. Are you a builder or a consumer? Comment your age and your biggest financial hurdle below. Let's get started. To build wealth, you must first understand the law of the financial entry fee. Most people believe that to enter the world of high finance, you need a suitcase full of cash and a Wall Street connection. This is a lie designed to keep you on the sidelines, paralyzed by the illusion of complexity. The reality is that the barrier to entry is not capital, but discipline. The $5 daily investment is a psychological filter. It separates the average, who prioritize the comfort of today, from the visionaries, who prioritize the freedom of tomorrow. Let us begin with Step 1, architecting the infrastructure. If you are going to build a skyscraper, you do not start with the penthouse, you start with the foundation. In the world of investing, your foundation is your platform. For our 1-year challenge, we established a set of non-negotiable criteria that every elite builder must follow. First, the elimination of friction through low fees. In finance, fees are the silent parasites that bleed your portfolio dry over decades. A 1% management fee might seem trivial today, but when compounded over 40 years, it can cannibalize up to 1/3 of your total wealth. You are essentially working for the bank for 12 years of your life. We do not accept this. Second, we require a beginner-friendly interface, not because we are incapable of complexity, but because complexity is often a mask for inefficiency. True power lies in the ability to execute with speed and clarity. Third, and perhaps most vital, is security and regulation. We seek platforms protected by the Financial Services Compensation Scheme in the United Kingdom or the SIPC in the United States. Your capital must be stored in a vault, not a glass box. We also require a platform that allows for micro-deposits and fractional shares. Without fractional shares, the elite stocks like Apple or Amazon would be off-limits to the small investor. Fractional shares allow you to own a piece of the world's most powerful corporations for the price of a sandwich. For this journey, we utilize Trading 212. It ticks every box, providing the tools of the 1% to the hands of the many. This leads us to Step 2, the sovereign tax shield. This is where most amateur investors fail before they even start. They play the game on the government's terms. When you invest in a standard brokerage account, you are inviting a silent partner into your business, the taxman. He takes a slice of your dividends and a heavy percentage of your capital gains. In many jurisdictions, this partner can take up to 20% or even 40% of your hard-earned growth. The elite do not pay more than they must. They use tax-advantaged accounts. In the UK, this is the Stocks and Shares ISA. In the US, it is the Roth IRA. Think of these accounts as an invisible border. Once your money crosses this line and enters the ISA or Roth IRA, it becomes invisible to the tax authorities. Every cent of profit, every dividend payout, and every dollar of growth is yours and yours alone. You can contribute up to £20,000 annually in an ISA or $6,500 in a Roth IRA. Unless you have maxed out these shields, you have no business using a general investing account. Why would you build a house in a territory where the king can take half your bricks? You build where you are sovereign. If you realize the government takes nearly half of your lifetime labor through various hidden taxes, would you keep working the same way? If you are ready to stop being a voluntary donor to the state, comment revolt below and let us see who is ready to claim their sovereignty. Now we move to Step 3, the selection of the engine. What are we actually putting inside our tax shield? Many people are seduced by the siren song of individual stocks. They want to find the next Tesla, the next Nvidia, or some obscure cryptocurrency that will turn them into an overnight millionaire. While the rewards are high, the risk of total wipeout is even higher. Individual stocks are fragile. They are subject to the whims of CEOs, the scandals of boards, and the disruption of competitors. The builders of the 1% prefer a different engine, the index fund, specifically the S&P 500. This is not just a fund, it is a bet on human progress and American corporate dominance. By buying an S&P 500 index fund, you are instantly becoming a partial owner of the 500 largest, most successful companies in the world. You are diversified, you are stable. Historically, there has never been a 20-year period where the S&P 500 has lost money. In our experiment, we chose the Vanguard S&P 500 Accumulation Fund. The keyword here is accumulation. In finance, there are two ways to handle dividends. Distribution means the company sends you a check, which most people spend on something useless. Accumulation means the platform takes those dividends and automatically buys more shares for you. This creates a feedback loop of growth that accelerates over time. It is the difference between a fire that stays the same size and a fire that consumes everything in its path. You are not just saving money, you are building an army of dollar bills that go out and recruit more dollar bills for you every single day. Step 4. The algorithmic execution. The greatest enemy of your wealth is not the market, it is your own brain. The human mind was evolved for survival on the savannah, not for navigating the volatility of Wall Street. We are hardwired to feel the pain of loss twice as intensely as the joy of gain. This leads to the fatal mistake: panic selling when the market is red and greedy, buying when the market is at an all-time high. To solve this, the elite use emotional decoupling through auto-investing. We set up a system to invest $5 every single day, regardless of what the news says, regardless of what the Fed does, and regardless of how we feel. This leverages the power of dollar cost averaging. When the market is down, your $5 acts like a vacuum, sucking up more shares at a discount. When the market is up, you buy fewer shares. Over time, you achieve a lower average cost than those who try to time the market. Attempting to time the market is a fool's errand. Time in the market is the only metric that matters. Now let us analyze the battle report, 1 year of data. This is where the theory meets the reality of the war zone. We began this challenge in August 2023. In the first month, we saw a modest return of 1.5%. A small win, but a win nonetheless. But then came September. The screen turned red. The portfolio dipped by 0.5%. I want to stop here and speak to you directly. I know that feeling. I have stood exactly where you are. I have watched the screen bleed red, seeing the hard-earned money I worked for seemingly evaporate into thin air. It creates a hollow pit in your stomach. It makes you feel like a fool. It makes you want to hit the sell button, take what is left, and run back to the safety of a bank account. I have felt that fear. It is a natural human response to loss. But that fear is the grave where the dreams of the average are buried. This is the moment where the losers are separated from the winners. The average look at their accounts, see a loss, and conclude that the system is rigged. They quit. They go back to spending their money on lattes and video games. But the builders, we see this differently. A dip is not a loss, it is a clearance sale on the future. When your portfolio turns red, do you feel fear, or do you see an opportunity to accumulate more? If you have the heart to stay in the game when others flee, comment builder below. Because we stayed the course, the tide turned. By the 6-month mark, the portfolio had surged to an 18.2% return. By the end of the full 12 months, the results were staggering. On a total investment of £1,505, the account balance stood at £1,972. That is a total profit of £467, or approximately $576. The rate of return for this 12-month period was 43.8%. Let that number sink in. While the average were complaining about inflation and the cost of living, this $5 a day strategy was outperforming almost every professional hedge fund on the planet. However, as your editor-in-chief, I must provide you with a radical honesty check. A 43% return is an anomaly. We have lived through a generational tailwind driven by the explosion of artificial intelligence and a massive rally in tech giants like Nvidia and Meta. To expect 43% every year is a dangerous delusion. There will be years where the market is flat. There will be years where it drops 20%. But here is the secret that the critics miss. If you are investing $5 a day, a market crash is actually your best friend. When the market drops 50%, your $5 buys twice as many shares. You are building up a massive inventory of assets at a bargain price. When the market eventually recovers, as it always has for over a century, your wealth will explode. The secret is not the 43%. The secret is the fact that we never stopped. We didn't let a bad September derail a 45-year legacy. The journey of the 1% is not paved with complex formulas or secret insider information. It is paved with the brutal consistency of simple actions executed over long periods. Most people will watch this video and do absolutely nothing. They will find an excuse. They will say they will start tomorrow, or they will wait for the market to be more stable. They will continue to trade their most valuable asset, which is time, for a currency that is being devalued by the hour through inflation. They will wait for the perfect moment to invest, not realizing that the perfect moment was 10 years ago, and the second best moment is right now. Every day you spend as a pure consumer is a day you have stolen from your future self. The $5 you spend today is not just $5. It is the $1.6 million you will never have. As for those of you still watching, those who have the stomach for the long game, here is a final hard truth. Wealth is not about what you buy. Wealth is about what you own. If you only buy things, you will always be a slave to the people who own the companies that make those things. The only way to break the cycle is to cross the line from being a consumer to being an owner. Do not just work for money. Build a system where money works for you until you no longer have to work at all. To confirm you are part of the few who actually finish this deep dive and have the discipline to succeed, comment "I am awake" below. This tells me you have the attention span required to become a member of the elite in a world of 3-second distractions. If this analysis provided you with real value, like this video and subscribe to channel. We do not beg for engagement. We offer a fair trade of high-level insights for your support. Share this with one person who needs to stop being a victim of the system. The path to your million-dollar legacy is clear. Do not let another day slip through your fingers. Click the next video on your screen to continue your transformation into a builder. The future belongs to those who prepare for it today.